Not all Calgary neighborhoods are created equal when economic shocks hit. In the 2015-2016 oil crash, some communities barely registered a price dip. Others fell 15 to 20%. In the 2008 financial crisis, some neighborhoods recovered within 6 months, others took 3 years. What made the difference? Today, I'm going to show you the exact characteristics of Calgary neighborhoods that hold value through inflation spikes, oil volatility, and economic uncertainty. And I'm going to name specific communities that fit the profile right now. This is where smart, resilient real estate money goes. Welcome back. My name is Conrad, and today we are going hyper local with specific focus on resilience. In certain markets, the question isn't just is Calgary a good market? The question is which specific part of Calgary performs best when things get difficult? Because the answer to that question has been extremely consistent across multiple economic cycles. And if you know it, you can make dramatically better buying and investing decisions here in Calgary. So let me share what 50 years of Calgary market data says about neighborhood resilience. Now, I'm going to go over this in sections. So we start with section 1. That's the 5 characteristics of a resilient Calgary neighborhood. Through every cycle, 1982, 1990, 2008, 2015, the same neighborhood characteristics have predicted which communities hold value best. Characteristic number 1, establish inner city or inner ring location. Communities within 8 to 12 kilometers of downtown Calgary have consistently demonstrated superior price resilience. This is because their value proposition is not dependent solely on the energy economy. It also reflects scarcity of land, walkability premiums, proximity to employment, and the irreplaceable character of mature tree-lined streets. You cannot replicate the Beltline, Kensington, or Altador in a greenfield suburb. That scarcity is the foundation of resilience. Characteristic number 2, strong owner-occupier concentration. Neighborhoods where the majority of residents own and live in their properties rather than rent or hold as investment weather downturns significantly better. Owner occupiers do not panic sell in response to a negative news headline. They absorb the shock of reduced equity and wait for recovery. Higher investor concentration buildings and neighborhoods show disproportionate price volatility in downturns because investors with negative cash flow are forced to sell. So that takes us to characteristic number 3, quality school catchment. This is consistent cross-cycle finding. Communities in the catchment areas of highly regarded public schools maintain demand from family buyers regardless of economic conditions. During the 2015 and 2016 oil crash, communities like Garrison Woods, Lakeview, and Altador, all in premier school catchments, experienced minimal price softening compared to comparable communities in weaker school zones. So that is very key, and it takes us to characteristic number 4, transit and employment access. Communities with direct LRT access or strong proximity to major employment nodes maintain more consistent demand because they appeal to a broad range of buyers, from first-time buyers to downsizers to professionals. Single access suburban communities are more vulnerable when buyer preference shifts, and especially in certain economic situations. And now we are at characteristic number 5, that is land component dominance. In communities where the land value represents 50% plus of the total property value, typically 50-foot lots or larger in inner ring communities, prices are structurally supported by the scarcity of developable land. Near the urban core. Even if the structure loses value, the land holds value. This is particularly relevant as Calgary's densification policies expand over time. We are talking about blanket rezoning right now, and these inner city areas are in high demand because of the lots and the land size. So now let's go to section two. That is the resilient neighborhoods by quadrant. Resilient neighborhoods by quadrant. So which quadrants are resilient? So we can take the southwest first. It is the most consistently resilient neighborhood. And the communities there we can look at, we're looking at Altador and Madaloop. These are Calgary's most consistent performer across every cycle. The 20-minute neighborhood, walkable to cafes, restaurants, independent retail parks, river pathways, strong owner-occupied concentration, premium school catchment, detached homes on 25 to 40-foot lots have held value through every downturn since 2005. The trade-off is it's already a premium price location. The second community is Lakeview, bordering the Whistlehead Natural Area and Glenmore Reservoir, with mature trees, 50-foot lots, and one of Calgary's most sought-after elementary schools. This community barely moved in 2015-2016. For long-term hold investors, it's one of Calgary's safest assets, and you have a lot of even long-term owner occupiers there as well. The next community in the southwest is Garrison Woods or Curry Barracks, a master plan infill community on former military land with exceptional walkability, modern build, and a civic character that attracts owner occupiers with deep community investment, minimal turnover, and means minimal forced selling pressure in downtown. We've monitored the price in those areas and they hold their own. Now let's go to the northwest. It's an established resilience segment of the city. And in that area, we are looking at varsity, the housing. So these are areas with mature 1970s communities adjacent to the University of Calgary and Foothills Hospital, two institutions that generate consistent research, improve employment demand regardless of oil prices. When energy employment drops, healthcare and university jobs don't. Communities near these areas anchor are naturally insulated. The other one is Silver Spring. It has large lots, mature trees, strong community association, Bow River pathway access, and relative undervaluation compared to equivalent Southwest communities. So it holds value through cycles due to land scarcity and strong owner-occupier demographics. Another community we can look at, looking at the inner city, Beltline, Bridgeland. So Bridgeland, the most obvious inner city growth story of the past decade. Exceptional, it has exceptional walkability, proximity to downtown core, LRT access, and a thriving independent restaurant and cafe scene. And the land value, given the intensification possible on most Bridgeland lots and the current zoning, provides a structural floor that purely suburban communities lack. And I know few investors that are deep in Bridgeland and developing and investing there. The next is Inglewood, Calgary's oldest neighborhood, has the deepest character, strongest independent commercial corridor, and most committed owner-occupier base. It showed less than 2% price decline in 2015-2016, while many suburban communities declined by 8 to 10%. The next, where we can see value resilience, is the Southeast. So in that segment, we can look at Urban Bay and Mahogany. The Southeast lake communities command consistent premium demand because of lifestyle amenity like private lake access that simply cannot be replicated or built elsewhere. So a lot of people like mahogany for that. Lifestyle-driven demand is more recession-resistant than purely economic demand because buyers who have specifically chosen these communities for the lake are motivated to hold through downturn. So that those two communities, Urban Bay, Mahogany. Now we have few other communities around. We have Seaton, Rainview, and all of those other others around those communities. But Mahogany holds it when it comes to that area. So now let's go to section 3, where we talk about neighborhoods and property types most vulnerable. Equally important, where not to concentrate capital in an uncertain, potentially inflationary environment. So we are talking about areas where you want to be careful about. So new construction apartment towers in the northeast and the southeast. The 17 or 18,000 units currently under construction are predominantly in these quadrants, high investor concentration, competing directly with purpose-built rentals. In submarkets with the weakest absorption history, this face the most severe price pressure in any negative scenario. I did a market update for March, and you can take a look. You see that that particular area is where we have the largest inventory of townhomes and other properties now. Suburban entry communities beyond the ring road. Communities like Skyview Ranch, Cornerstone, and Livingston, while excellent for families seeking affordability, are most sensitive to employment shocks because they attract a buyer demographic that is more vulnerable to income disruption. In the 2015-2016 crash, outer ring suburban communities experienced disproportionate listing surges as job loss driven sellers concentrated in these areas. Those are the areas where we saw listings kind of came up, high inventory in those areas. So those suburban communities, they are good, but they are not able to absorb shock, economic shock as much as the inner city and others mentioned earlier. So luxury condo towers downtown. The 700 to 1.2 million condo segment downtown is the most discretionary purchase in the market. Uncertainty hits discretionary purchases first and hardest. So expect 10 to 15% negotiation room in this segment if the geopolitical situation worsens. So downtown condos, you want to be very careful. Even those below 700, we'll be monitoring. They are not doing well. So when there is a shift in the market, you can feel the impact most. So now section 4, there's resilient buyers checklist, the resilient buyers checklist. So when evaluating any Calgary property for purchase in the current environment, apply this resilience checklist. One, is the community established, that is 10 years plus old or 10 years old with proven demand history? Two, is it within 12 kilometers of the downtown employment core? Three, does it sit in a quality school catchment area? Four, is the owner occupier ratio above 65%? Five, does the land value represent at least 40 to 50% of total property value? Six, is there transit access or is it within walkable distance of amenities? Seven, has the community demonstrated price resilience in at least one previous downturn? Properties that check 5 to 7 boxes are your resilient holds. Properties that check fewer than 3 boxes require a higher return expectation to compensate for the additional volatility risks. So these are things to look out for to know which areas in Calgary are very solid if you are planning to buy in Calgary. Location has never been more relevant than in an uncertain economic environment. The neighborhoods I've described today have earned their resilience through multiple economic cycles. They are not immune to downturns. No real estate is actually, but they recover faster. They decline less and provide a kind of long term wealth building stability that allows you to sleep well regardless of what the news says tomorrow. So, here is it. If you want a specific community by community analysis for the neighborhoods you are considering, let's book a call. I have a link in the description. And also, please like, subscribe, and share this with any buyer who needs to understand where the real value in Calgary is. See you next time. The name is Conrad. Have a beautiful day. Bye.